Welcome to the Daily Update Podcast, where I'll go over the action in the market for Friday, September 26th, and we'll see how things look for Monday, September 29th. Going back over Friday's market performance, the S&P 500 clawed back some ground, posting a 0.59% gain to close just shy of the R2 resistance level at 66.74. The bounce kept the index firmly above its 20-period simple and exponential moving averages, underscoring a bullish undertone across the daily, weekly, and monthly charts. However, below-average trading volume tempers the optimism. Rising prices without robust participation often signals fragility. Notably, growth stocks and megacaps lagged, while value stocks in the broader market exhibited relative strength. This rotation hints at a defensive posture, with investors favoring stability over speculation in an uncertain environment. Looking at the economic data and sentiment, the PCE inflation report aligned with forecasts. Core PC edged up 2.7% year over year from 2.6%, while the headline inflation ticked up to 2.9%. These figures might dampen near-term hopes for a Fed Reserve rate cut, suggesting policymakers may end up holding steady. On a brighter note, personal income rose 0.4%, and consumer spending surged 0.6%, both exceeding expectations and affirming a vigorous economy. Yet consumer sentiment dipped slightly to 55.1 against a forecast of 55.4 and a stark 70.1 from last year, reflecting lingering unease. The 10-year Treasury yield climbed to 4.19% and the dollar softened. Overall sentiment is at 53, which is neutral, leaning somewhat positive, but momentum remains muddled. Looking at geopolitical and policy currents. Geopolitical ripples were muted this past week, but domestic policy looms large. A potential government shutdown simmers as partisan posturing intensifies. More pressingly, the Trump administration has proposed additional tariffs set for October 1st, which targets imports aggressively. 100% on pharmaceuticals, 25% on heavy trucks, 50% on kitchen cabinets, and 30% on upholstered furniture. Amid bolstering U.S. manufacturing, these could ripple through supply chains and inflation metrics. Looking at the technical indicators and sectors, the technicals flash yellow lights right now. The S&P to VIX correlation and elevated volatility risk premium warn of downside risks, often harbingers of pullbacks. The parabolic SAR is still negative for the second session, a bearish pivot, while stochastics are offering ambivalence. Long-term bullish but declining, while short and intermediate term are waning. Still, the S&P 500 is holding above critical moving averages, with support near the 20-period exponential moving average holding on Thursday. Growth-to-value ratios did weaken, especially in small and mid caps, but in the bigger picture, remain positive. Looking at the sectors, utilities spearheaded gains, trailed by discretionary. This was helped by Tesla's 4% increase. Communications and tech trailed. The financial sector edged higher but continued to trail the performance of the S&P, while small and mid caps mixed it up. Mid caps notably filling a gap on the daily chart to turn green according to the Elders Impulse system. Looking ahead to Monday, Monday's pending home sales data is likely a non-event, but eyes will turn during the middle of the week. ISM manufacturing will be released on Wednesday, and Friday's employment report, paired with ISM services, will be pivotal. These reports could sway sentiment decisively. Seasonally, September 29th is a coin flip, no real edge. The S&P 500 eyes resistance above current price at 6,700 and support around 65.83. The bias is positive, but conviction is waning. In conclusion, the S&P 500 stands resilient above key support levels, yet economic crosscurrents, technical cautions, and policy wildcards counsel prudence. Near-term drivers could include hitting support or resistance pivot levels and any emerging or escalation of geopolitical jitters. Thank you very much, and I will talk to you in the next podcast.